This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russian wholesale gasoline AI-92 grade prices fell by 9.7% to 55,892 rubles, $582 per metric ton on Friday, according to exchange data, following a government ban on fuel exports. Diesel prices were down 7.5% to 66,511 rubles per ton, according to the data from the St. Petersburg International Mercantile Exchange, SPIMEX. Wholesale fuel prices in Russia had been steadily rising this year amid fuel shortages, reaching all-time highs.
Oil prices held steady on Friday but closed the week lower on profit-taking and as markets weighed supply concerns stemming from Russia's fuel export ban against demand woes from future rate hikes. Brent futures settled 3 cents lower at $93.27 a barrel. It fell 0.3% in the week, breaking a 3-week streak of gains. U.S. West Texas Intermediate Crude, WTI, futures rose 40 cents, or 0.5%, to $90.03 a barrel, as U.S. oil rig counts fell. The benchmark fell 0.03% for the week, the first decline in 4 weeks.
Moving on to the top news in the energy sector.
The Russian government cut its price forecast for its natural gas exports outside the former Soviet Union for 2024 to 26, according to figures presented by the Economy Ministry on Friday. Russia relies heavily on sales of oil and natural gas, which account for around a third of federal budget revenues, while the government has been discussing budget plans for the next 3 years. Moscow plans to increase budget spending by 25.8% to 36.6 trillion rubles, $383 billion, in 2024, Prime Minister Mikhail Mishustin said on Friday, with hefty increases in military and social spending expected ahead of a March presidential election.
The complete phasing out of fossil fuels is not realistic, China's top climate official said, adding that these climate-warming fuels must continue to play a vital role in maintaining global energy security. China is the world's biggest consumer of fossil fuels including coal and oil, and its special climate envoy Xie Zhenhua was responding to comments by ambassadors at a forum in Beijing on Thursday ahead of the COP28 climate meeting in Dubai in November. Countries are under pressure to make more ambitious pledges to tackle global warming after a UN-led global stocktake said 20 gigatons of additional carbon dioxide reductions would be needed this decade alone to keep temperatures from exceeding the critical threshold of 1.5 degrees Celsius. Next, we have the top news in metal markets. China's top copper smelters maintained their fourth-quarter guidance for copper concentrate processing treatment and refining charges at a 6-year high amid expectations of ample supply in the market. The rates, decided at a meeting of the China Smelters Purchase Team, CSPT, held on Friday, were $95 per metric ton and 9.5 cents per pound, 3 sources with knowledge of the matter said. This rate is the same as that in the third quarter and the highest since the fourth quarter of 2017. It is higher than this year's annual benchmark of $88 per 8.8 settled by Chinese smelters and global miners.
Iron ore futures rose on Friday, buoyed by reports of China's support measures for businesses and after Rio Tinto said it paused work at a mining site in the Pilbara region following an incident. The steelmaking feed, however, was on track for a weekly fall amid persistent concerns about top steel producer China's troubled property sector. Iron ore's benchmark October contract on the Singapore exchange was up 2% at $119.80 per metric ton, as of 0422 GMT. It has fallen more than 2% this week after scaling a 6-month peak last week.
We will now look at the top news in the agricultural sector.
Global sugar prices are likely to remain high due to expectations of lower output in India, French trading group Sun said on Friday, adding that prices may trade between 22 and 30 cents per pound in next 12 months globally. Prices are probably going to stay strong, Jeremy Austin, General Director of Sun Brazil said on the sidelines of a sugar conference in New Delhi. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.